And hello to everyone. So I'm Paul O'Connor. I look after the Sustainable Finance Debt Capital Markets team here at JP Morgan, EMEA region. So today we are joined by a group of very experienced panelists to talk about sovereign sustainability linked bonds. Before we do that, we are going to hear from Nature Finance, who have some deep experience in the sovereign sustainability linked space. We're going to hear from Gregor Pipan, who's been working recently with Slovenia on their recent sovereign sustainability linked bond. So I'm going to ask Ludo to roll that clip, and then we'll get into the discussion with our panelists. So Ludo, please go ahead. Thank you.
Last week came to fruition the work that Nature Finance helped set in motion 2 years ago when we brought the proposal of issuing a sustainability-linked bond to the Slovenian government. The idea behind our initiative was to demonstrate that sovereign SLBs are instruments suitable also for developed markets issuers and to hopefully encourage other EU countries to follow suit. For example, we would like to see replicated the green sovereign bond issuance process that was ignited in 2016-2017 by Poland and France. We then participated in the analysis and shortlisting of the potential KPIs and sustainability performance targets. At the end, the Slovenian Treasury decided to focus on the emissions and energy KPIs, and earlier this year it issued the SLB framework with 3 KPIs involved. Those were total GHG emissions, share of renewables in energy consumption, and energy efficiency. As you probably all saw, last Tuesday, the Treasury issued a 10-year, €1 billion SLB with a step up and step down clause of 50 basis points and one single KPI. The KPI in question are total annual greenhouse gas emissions, and the target to be achieved to not trigger a step up is a 35% decrease of total GHG emissions by 2030 relative to 2005 baseline, while the stretch target is a 45% decrease of total GHG emissions by 2030 relative to 2005 levels. The issue was met by a very robust demand and was oversubscribed by over 6 times. Also interesting to know is that Slovenia has committed to issuing a benchmark sustainability themed bond every 2 years. So there is a prospect of more SLBs coming to the market in the next years. And we do hope that this landmark issuance, like the first one in Europe, will encourage other EU sovereigns to explore KPI-linked structures, even more so now with the revision of the NDCs and setting up new climate objectives for the period up to 2035. But to see more issuance of KPI-linked bonds coming from the developing countries, we believe that applicable and practical technical assistance throughout the entire process of preparation and issuance needs to become freely available to interested countries. We would especially like to see more KPIs related to climate resilience and climate adaptation being integrated in the frameworks, because they can directly impact the public finances. Apart from this work, Nature Finance has been recently also working on the so-called financial materiality assessment, or shortly FIMA, framework that we piloted on a case in Ghana. FIMA framework takes a given set of sustainability targets and corresponding KPIs and models the impact of achieving or missing them on the public finances and the wider economy. This way, the framework demonstrates and quantifies the potential upside of pursuing financially material and credit-relevant performance targets on credit ratings and DSA of countries. Public positive impacts can be magnified by embedding the KPIs into public financial management strategies and fiscal frameworks, including via the use of financial instruments such as SLBs, sustainability-linked loans, debt for development swaps, nature credits, or green budgeting frameworks, and similar. So far, this is a conceptual piece, but we are planning to develop and test it further. And I invite all of you to check on our web pages the report Nature, a Shock Absorber, that explains the framework more in details and the application on the case of Ghana.
Great. And many thanks to Gregor and the Nature Finance team for taking the time to share their thoughts with us. So let's get started with our group of panelists here. So we're very fortunate to have Victoria here from the Uruguay Debt Management Office. Uruguay, famously one of the original sovereign sustainability linked bond issuers. And obviously, having had that depth of experience, we thought we would take advantage of Victoria here a little bit to talk about her experience with the Uruguay SLB program. So maybe, Victoria, on that, maybe you can share some of your thoughts based on your experience. In particular, what the learnings were. Would there be anything that you would do differently next time? And maybe pick up a little bit on the key elements such as reporting and data verification, because they're obviously challenging areas from a sovereign perspective. So over to you, Victoria. Thank you.
Thank you, Paul, and thank you for the invitation. For us, it's very important to share our experience. Maybe we can tell you about some of the challenge and the lesson we can give you from the case of Uruguay. In the first place, when we start with the idea of issuing and designing the SLB framework, there were no precedent. So we have to start from the scratch. And this was a key challenge for a country. Then the other key point that for us was important in the designing of the SLB framework was to engage with investors early on in the process to test the idea and make sure that they are part of the journey. No? Not only you have to keep investor update on the financial and macro side, but also it's important to give them update on the environmental side. And this is something new for the Ministry of Finance that had never done before, to talk with investors about, for example, environmental data on how it's performing the GHG emissions of the country. So this is was one of our key challenge. Then after talking with investors, we have a lot of engagement with them before the issuance. We have made two non-derogations. Then we make a derogation. So before going to issue the SLB, we have tested and make investor and also the institutional the financial institution as our book runner that get involved in the process and give us a very important advisement on the topic we have to be included in the SLB framework. Going straight to the point of the designing of the SLB, we have many challenges and lessons. The first one was how we select the KPIs and the SPT. This is very important because you have to select some KPIs that has to be material and also at the same time has to be attractive to investors. So we get the advice from our financial with our book runners. We test the waters we mentioned with investor, and we finally select two KPIs that we are including in our NDC. So we get advantage of including KPIs that the country has put in our NDC, and the country has commit with that KPI. Another aspect was the concept of ambitious. That was a key for for investors when they look to the SLBs to select and to decide what SPT we are going to select and what will be the trigger for that SPT. We have to coordinate within 5 ministries that we are involved in this process, and we get agree on what will be the level of ambitious we will include in that in the SLB framework. Of course, we want to maintain a balance within to select ambitious KPI and at the same time that we're something that will be achievable and for the country. Another big lesson and second challenge that we have in the process was that we were including and proposing to investors the idea of that a country will be rewarded if by lowering its financial cost, if outperform its ambitious target that we were setting in the SRB. So we were introducing for the first time to investors the idea of the step down. Of course, at the initial stage, we have some pushback of the idea step down. This was new. But at that point, after having many interactions with investors and with support of our book runner, we have get the support to issue the SLB. we put in the idea that in the concept of the step down, we say the argument that the market in a different way, incorporating maybe two notions that we will try to connect. The first one, that ESG foundation are increasingly important for credit risk assessment, and we were seeing that this is part of the evaluation that investors and also credit rating are taking in consideration. And the other is that you need to look beyond the coupon and focus more on total return. So for us was we say if a country will improve its credit profile, perform its environmental target, it probably could improve its credit profile overall. So this will be impacting the secondary valuation of all the curve. So we will be perceived as more credit worthy, and this will be translate in more value for our asset that it will be translated in a better a higher price for our secondary market price for our bonds. And finally, maybe two key important aspect and lesson that we were learning is that the reporting and verification requirement, as you mentioned, Paul, this is key. We take a lot of time on having a timeless, consistency, and transparency data, because we think that this is important for investors to communicate clearly what were the value of the KPI and what we were thinking to progress to achieve that KPI, and also because it give investors more timely information that they could be include in their portfolio assessment. So we build up in a strong monitoring and reporting and verification framework. For us, the data integrity and to keep up a reporting timely availability and credible external verification of the KPI was key. We take time to have transparency and accountability. Finally, we commit to have an external and independent and qualified review of the evolution of the KPI that was agreed and done by the United Nations Development Program. And maybe an important point is that we compromise to have this system of reporting and verification through of the life of the bond. So after the trigger date, we will compromise to have also the reporting and verification of the KPI of our of the KPI, including our SLB framework. And finally, was that to put in place this type of the SLB framework is require a lot of coordination, is require a lot of patience, and also persuasion to set up this institutional arrangement. We say that to set up this SLB frameworks requires a lot of governance. So you have included two KPI that were related to environmental of E, but also this type of project requires a lot of governance and support from all the institutional arrangement that were set in the country.
Great, many thanks, Victoria. I think that's a really important point to finish on. When we were discussing the outline of this session, I talked to Cedric about the kind of current political environment. Cedric, I know you had some questions on that. If you want to fire away while we have Victoria.
Yes. Indeed, Victoria, you highlighted the need for patience, persuasions, but also institutional arrangements. So, what's the cross-party political support behind the SLB initiatives? And do you think that in the current context, globally speaking, with some divergence around sustainability, might be perceived as a barrier for DMO to explore the instruments?
Okay, this is a very good, important question, because we take this, as I mentioned, this project take 2 years, but we don't see any political backdrop or maybe some in the design of the bond. In that, maybe let me show two things. One is that this process spans across many administrations. The target that were set in the KPIs that were the one included in the NDC were set in 2017, and this was established by the administration that took place in 2015. Then we have a new administration that the one that took office in 2020 that was the one that decided to issue the bond and to confirm that the targets and the goals set in the NDC that were put in and set by the previous administration in the covenant of the bond. So this is spanned by 2 administrations. And after that, the trigger day, the year, will be in this year, 2025, that we have a new administration that has took office on March of this year. So maybe this shows how this project is across of many administrations and how one administration is supporting the decision of the other administration. So we are connecting and having independence in terms of on how the government designs, how it finances, and also independence on how the government is supporting its sustainable agenda. And the other important point that we to highlight in terms of governance, institutional, and political arrangement is, as I mentioned, we give a lot of importance on the governance and institutional arrangement. We set a new interministerial task force that was created to ensure that we have give all the responsibility goals deadline for each ministry. Of course, at the end, the Ministry of Finance will be the one responsible for all the reporting and verification, because it's the one that is at the end the one that decides when you issue on and is responsible for all the things that are related to the bond issuance. And this task force was created by a presidential decree that was signed by the 5 ministries that were involved in the project, but also this decision was go beyond the president. So this task force was supported also by the president. So I think that maybe show the importance of the institutional, we say, well, the institutional arrangement that are key for supporting this type of frameworks.
Absolutely. Many thanks, Victoria. I think that point comes across very strongly. If we could move on to James. James, when we spoke about this session earlier, we had talked about the potential power of the sustainability-linked structure. My personal view is that every government could look at using one of these. Given the points Victoria made about creating that kind of direction of travel and sustaining that direction of travel, more importantly. And we talked about the sort of African context and some of the countries that you're focused on. Maybe you could talk a little bit about the experience you've had in speaking to African sovereigns about this instrument and how those conversations have gone. Thank you.
Sure. Thanks, Paul. And first, let me thank you for inviting me to the panel, but also thank Victoria and the DMO team. You really set the path for sovereigns in terms of innovating on SLBs. And also we did a linked loan with Uruguay on our own account, which was also kind of a path-breaking transaction. So I just want to highlight, it's a sort of mutual admiration society here. So thank you for setting the way. And yeah, just to announce, actually a colleague of mine, John Leo, is on the call here, just texted me that Cote d'Ivoire just put out its sustainable linked financing framework today. It was published, and the intent there is that we'll support a sustainable linked loan for that sovereign in the coming, hopefully months, but that's on its way. And I would say, it's generally the labeled bond market that we're seeing in the sovereign space is relatively limited. I mean, what we see in emerging markets is about 200 billion so far issued. It's a relatively small part, but I think I would just put it this way, there may be 5 areas where there's interest and why there's interest. And, it really starts with flexibility on the spending. I think that's where, looking around the type of financing that may be raised internationally, particularly a Eurobond, obviously a plain vanilla is the most flexible thing they could do. But there's a second issue of, what kind of investor base they want to tap. But the flexibility of the use of proceeds is seen as quite a key element for sovereigns who may not have a range of eligible projects underneath and have those identified, targeted, et cetera, across ministries. So that flexibility of spending is one. I think I mentioned tapping investors, different kinds of investors. That's key. There is that scarcity, as I mentioned. There are very few sovereigns out there with these kinds of instruments. So there is a scarcity of supply. And there still seems to be, despite your question about, politics and so forth, there still seems to be demand for these products. So tapping that demand with a relatively limited supply seems to be another driver. The cost part, and Victoria, I think, highlighted well, all that coordinating and so forth. But the use of proceeds has, that additional depth of need of identifying projects, monitoring those projects, et cetera. And, I think the feedback we typically get from DMOs is they'll say, okay, if we have to do all this, these compliance costs we deem to be quite high, and the greenium we might get from a use of proceeds bond may not actually cover those costs. So that's actually an interesting, study question, maybe for someone, maybe including the bank, like what exactly are the compliance costs? So that always comes up. But I think two more things out of the five. One is to do exactly what Uruguay did, is to showcase the kinds of progress our clients are actually making in the sustainability space. So, I think, you see more of the headlines you read are about debt and credit ratings and so forth. But what we see is actually quite a lot of progress, and Côte d'Ivoire is a good case here. On the forestry side is a lot of progress on sustainability efforts and policies and impacts. And so they're wanting to showcase that through these instruments, which is a positive. And then the final bit is, and it's more maybe on the loan side, but the idea that because of the credit rating and credit quality, the flexibility of using a sustainability linked loan is a positive, because you can put potentially some different credit enhancements into the instrument to upgrade and improve terms for clients. And then also it gives a bit more flexibility to bring in different kinds of performance-based financing, say from donors, which is essentially what we did in the Uruguay sustainability linked loan, where we put a performance-based grant into the loan itself to pay down the interest. So you have flexibility also in structuring the instrument. So those are sort of the five things I would highlight. Thanks.
Many thanks, James. And I think Cedric had some points also on the more technical aspects. If you want to fire away, Cedric.
Yeah, no, thank you, James. Super interesting, your emphasis on flexibility. That's true that sometimes there's a bit of competition regarding the use of proceeds. Some DFIs and donors are requesting the ring-fencing of the proceeds, and some countries might be deprived of sufficient volumes, and indeed the SLB format allow to overcome that limit. Now, I wanted to ask you about the different demand. You just stressed that there were different investor pockets. So if you can elaborate a bit on that, and also in your experience, there were some challenges raised around accounting treatment of SLBs. You did mention credit enhancement mechanism. So how is that evolving in terms of understanding the instruments and dealing with its accounting treatment specificities?
Okay, sure. Yeah, I mean, a number of things. I mean, the demand part, I guess I probably didn't answer that properly, but I mean, I would say we're engaged directly with at least 5 to 10 sovereigns in Africa on this topic alone. And I mean, on the World Bank side, we have our IFC colleagues, but we're focused on the sovereign and then sub-sovereign. So for example, we did 2 SLBs with the Development Bank of Rwanda. So sort of state-owned banks, development banks, we're seeing that demand. So there's a lot of it out there, but again, hitting debt is debt. So it's hitting up against those kinds of constraints about debt limits and over indebtedness and so forth. So, I want to just make that clear, that just because it's an SLB doesn't mean somehow it avoids the gravity of credit ratings and so forth. So that's where the credit enhancement comes in. But I mean, I think it's a bit of that contrast of these SLBs versus use of proceeds. And I think use of proceeds is still by far the biggest chunk of what we see, green bonds and so forth. And to me, it's a bit of a go with what that's what's been in the market. And the first thing since 2008, there's some debate over who issued the first green bond, but we like to claim we did. But anyway, there's some debate around that. But I mean, that's what the market seems to know. And I think because it's nascent, it's new, it's a relatively unformed product, and there's a lot of leeway. There's some good of that because you can innovate, exactly what Uruguay did. But I would say, I mean, I just highlight 4 things maybe that are part of the debate for this panel. But I mean, there are 4 areas where we see where things haven't really settled, and maybe ICMA and other standard setters have a bit of role to play there in standardization. But one is this issue, exactly as was highlighted, setting the KPIs. What exactly is the KPI? How do we determine it amongst many? I know ICMA has a registry, which is helpful. We also have what we call Sovereign ESG Data Portal, which has 200 plus indicators, at least 20 years of history on each, and so forth. And now we have a tool that's emerging called Feasibility and Ambitiousness Dashboard, FAB. But the idea is to take that kind of data, say on forestry, and map against feasibility, ambition, and get a sweet spot of something that's difficult to achieve, but not impossible, and something that's quite ambitious. So some of those tools are emerging, but then I think the next bit about that, the second part, is around how you actually structure the KPI. So that's like the financial part. Is a coupon step up, a step down, a symmetric step up, step down, multiple measurements of that step up or step down. And we've seen multiple cases of that. Uruguay is the first to do this up down in the sovereign space on the bond. In the case of Rwanda that we supported, it was a step down. Chile's bonds have been step up. So that's not really settled, and it doesn't also seem that whether it's measured over time or just at one point in time is also not completely settled. And then valuing the KPI, how much is a KPI worth? Is forest cover conservation worth 50 basis points, 25, 100, et cetera? Is there any science behind that financial valuation of the KPI? That's still, sort of a remaining thing. And then the final thing, as you mentioned, accounting. I think I'm not an accountant, but it does seem like that's getting settled through the IFSB and FASB in terms of their view of derivatives accounting. But that has come up in different ways where we have heard this from investors, that because of this uncertainty in the coupon or interest rate adjustment, and we had this problem internally, by the way, with the linked loan, that it has to be somehow marked to, can't say market, so it's almost marked a model of the probability of the KPI happening, and then fair valuing and so forth. And that then becomes, what we're hearing in the loan market, an issue of how big or small the ratchet becomes. So essentially it's kept to a de minimis level, so you don't have to account for it separately as a product with an embedded derivative. So it's kind of a wonky technical issue, but an important one that impacts that valuation of the KPI. Because even if it might be worth somehow 100 basis points, that might impact the structure of the instrument and how that's accounted for, booked, et cetera, by investors. So those are the couple of things I would highlight, and all things that are unsettled, and all things that maybe ICMA, standard setters, ourselves, and so forth can help, work on standardizing. Thanks.
Thank you, James. It's a perfect transition with Malika, indeed, about the let's say the valuation of the KPI and the credit consequences of the selected KPI and SPT. So, Malika, based on your experience with the sovereign SLB, would you say there is a disconnect or connections between the chosen KPI, the SPT, and the credit worthiness of the sovereign issuers?
Thank you, Cedric, for the question, and I would like to thank ICMA for organizing today's webinar and inviting me to participate in the panel. And hello, everyone. Indeed, SLBs allow bond market participants, we believe, to supplement portfolio returns and hedge against unwanted risks. So while contributing to a sustainable future, that's what we're all trying to achieve. So in my view, going forward, we will see the growing link between selected KPIs and also SPTs performance and the credit risk profile of sovereigns, because we already see the growing financial materiality of the physical climate risks that impact the credit profile of some countries already. And unfortunately, we will see the increase even more going forward in the longer term. But for example, if a sovereign SLB issuer indeed picks the right ESG KPIs, as Victoria correctly mentioned at the beginning of the panel, it will lead to reduction of climate risks and hopefully the reduction of the emissions, the reduction of the carbon footprint, and which will lead to a stronger credit profile and of the sovereign bond issues. So I fully agree that there will be even a more connection between the sustainable finance related KPIs and the credit profile. sovereigns.
That's quite promising indeed. To if it becomes really credit material and a good proxy of the debt sustainability of a given country. In terms of, there have been a lot of discussions around target calibration, target assessment, target deviations, and would you say that the investors are now more equipped, more prepared to model the probability of reaching the targets, looking at some factors, trying to deduct from let's say the economic cycles or the spending of the countries or other drivers, the SPT achievement. So do you have enough data, and how data can be used to model SPT achievement or failure?
I think it's a work in progress, given that sovereign SLBs are relatively new to the market, and different investors use different data and then also different tools. So I cannot actually speak for the majority of the investor community, but I can just say that indeed I have listened to a number of different presentations, and then also I know that the sovereign SLB issuers actually, as again Victoria mentioned, that they do this advanced and then non-deal roadshow and engagements with investors. So this is really helpful from the beginning. Also, the structurers really are doing a very good job, and I know that I work for BNP Paribas, but I would like to highlight BNP Paribas CIB's work, that they've done a lot of assessments and then provided different scenarios and then the test analysis. And I also would like to highlight that Anthropocene Fixed Income Institute, they actually publish a regular research that is really helpful, covering overall the sustainable finance, but also in particular the big fans of SLBs and sovereign SLBs, I know. So they publish research and analyze sovereign and corporate SLBs and provide the analysis about the SLB issue targets and overall the ambition, with a focus on which SPTs would require a considerably high emission reduction, for example, compared to the historical trajectory. So we use and we read it as well. And then also internally at BNP Paribas Asset Management, we adapted our ESG scoring framework that provides us a view of the ESG performance of countries, and we have a coverage of 116 countries. So basically, this enables us to compare countries with different levels of economic development across the variety of environmental, social, and governance dimensions. And notably, we assess countries' ambition for tackling climate change with regards to their national determined contributions through the detailed information on the policies adopted by countries to address climate change, and also incorporated the forward-looking physical climate risk exposure, as I mentioned earlier. So this is really crucial for a lot of sovereigns, for all the sovereigns really, and then it's becoming a credit assessment, I think, already now. And in addition to the ESG KPIs, as I mentioned, that we use ATR and then also the legislative commitment, as well as physical climate risk data and the sovereign carbon footprint. We incorporate the qualitative inputs from our investment teams in depth knowledge, and then also we engage a lot with policymakers. So this is a very important dialogue with us. So there are different tools, but I think there is plenty of room for an improvement. So yeah.
Thanks, Malika. Fully endorse the shout out to the Anthropocene Fixed Income Institute. If you haven't had a chance already, I suggest everybody go and have a look there. There's loads of research on the sovereign sustainability link structure. I don't know who's a bigger fan of sovereign SLB, me or them, but as I say, do take a look if you haven't had a chance to look at the research already. It's good stuff. So just one or two more questions for Malika, if we may. If anybody has a question to ask of our panelists, please do feel free to use the Q&A function, which is at the bottom of your screen there. I see there's some questions coming through already, which we will get to. But Malika, just last point I had in mind was about the concept of the twin step. How do you think about reconciling that with your asset management mandates, given that in theory, you're acting on behalf of clients who are expecting returns and things to be set up in a certain way. And obviously the idea of having a step down in the interest rate as well, may be something that you have to reconcile with those asset management constraints. Maybe you can comment a little bit about that, because I think it's a really important consideration.
Sure, Paul. I knew that you would ask the toughest question. So managing a portfolio of SLB, we appreciate that it involves assigning sovereigns and then also corporate ESG scores at the issuer level. So we have the ESG scoring at the issuer level for all the exposure. So it also means monitoring the likelihood that the issuer maintains its sustainability targets throughout the bond's life, and considering the possibility that failure to meet the target triggers a debt crisis event. So the possibility of a coupon fluctuation could deter investors from making these instruments a large portion of their bond portfolios, and really limiting the size of the SLB market. But we see SLBs, however, as a vital mechanism for extending access to international finance for sovereigns with the climate ambition. So they facilitate a holistic approach to sustainability and considering a country's wider policy and strategic aims rather than a single project. For example, if we compare it to use of proceeds. And once improved, market regulation comes into force and reduces the threat of greenwashing or consistent climate targets. We expect the SLBs to take on a greater role as an instrument for sustainability reforms. So mixed feelings, and again, we would like to see what's going to happen in practice, but still big supporters of especially sovereign SLBs.
Great. Many thanks, Malika. I wanted to turn now to the Q&A, which has started to filter in. We have a question on encouraging more sovereign issuances that maybe the panel would like to comment on. What could we do as an industry, as a group of financial market participants to incentivize and encourage more of these instruments, given how potentially powerful they can be, particularly when it comes to things like incentivizing delivery of Paris NDCs and the like. Any thoughts on that? Who would like to comment on what we could do to incentivize more issuance of sovereign SLBs?
I can add.
Yep, go ahead.
Yeah. So I think in terms of the what the SLBs can provide is that the SLB targets are more robust than climate goals frameworks such as national determined contributions, so which form a part of the Paris Agreement. NDCs are self-determined and carry no financial penalties, and accordingly, almost every signatory of the agreement has to date made little progress or even failing on the NDCs. So to issue an SLB, a country must align all government institutions to meet the commitments outlined in the bond and take an active role in policy making. So with, of course, fiscal penalties at stake, SLB can thus lead to a more holistic, ambitious approach to national sustainability goals in comparison to NDCs or other international climate targets. So I think to the market is a much stronger commitment and message.
Yep, absolutely agree. Any other thoughts on that, or maybe we can move to another question?
Well, I might add just quickly one thing that, at least from our end, we're doing with the sort of public sector space, is trying to, for lack of better words, level the playing field of SLBs, SLLs, and other kinds of instruments. So basically through various kinds of support, be it donor or otherwise, to help with framework development, KPI development, and then ex post sort of monitoring and so forth. So otherwise there's a fair bit of cost in there that then the issuer actually is taking on. So that's one way we're trying to do that, and then the other way is sort of bridging, right? And so a lot of things that have been said here, bridging that market view with the sovereigns to help them sort of understand, embrace, etc. And so a structure that would come through would be workable and practical if they go forward. So I think those are two key areas we've been focused on.
Maybe to bounce back and reacting to some of the questions about the two formats as synergies between the use of proceeds and the SLB. It's notably for you, James. Do you think there's a bit of overlap or synergies? If we take the example of Slovenia, what is super interesting in the framework is that, of course, it's so you have the KPI, the SPT, but they do mention the decommissioning of some coal assets with subsequent investment which will be necessary. So in the end, you need spending from the countries. You possibly have loss of revenues related to some activities that will in the end impact the achievement of the SPT. So are the boundaries really intangible between the use of P and the KPI and SPT? What's your take?
Yeah, is this one for me? Or for okay, I can
Yeah,
try. Maybe Victoria as an issuer may have some views on this too. But I mean, I think we've seen a bit of push that way, and it seems like there's a bit of the, I was sort of mentioning the go with what you know, but it's sort of I understand the green, and I kind of want that, and I want the SLB. So you kind of get this push for some hybrid type of instrument. What we've tried to do separately is sort of keep the two parts clean, where if we have an instrument where, for example, a sustainable loan, the portion I was mentioning, like for instance, a performance-based grant for achieving the targets is going for actual use of proceeds, but the underlying loan's not, right? So that's some kind of a mix, but it's not a market instrument. And I think the question kind of bounces back a bit to the standard setters as well, is whether you want that kind of a clean line distinction, because at the end of the day, for the issuers, when this comes, at least the feedback we get is like that's kind of the worst of both worlds, because we have to both track use of proceeds, eligible projects, etc., and we have to meet a KPI, and essentially the compliance costs are high and the upside financially isn't particularly interesting. So I would be a little bit leery, personally. I mean, it's not an institutional view, but I'd be a little bit leery of pushing this, particularly issuers who already, are kind of leaning that direction towards an SLB because of the flexibility of the use of proceeds, even if investors want to see tangible projects underneath. I mean, it's kind of a choose one or the other type of scenario in my view.
Thank you, James. There was a question on the compliance cost, the administrative cost that you do highlighted for SLB versus use of proceed. Is it something the World Bank is working on to help reducing those costs by providing technical assistance, by strengthening statistical capabilities of the countries to indeed have the proper track record, to also shorten let's say to shorten the time lag and the frequency of publication of some KPIs. So what is being undertaken, and are those compliance costs likely to decrease in the short term?
Yeah, I mean, as mentioned, that's a key part of the engagement. So trying to basically support underneath the development of frameworks, development of sort of an issuance plan, KPIs, etc. And I mean, the costs are kind of all over the place. So it's some are small, like the SPO, initial opinion is not a big chunk, but overall monitoring can be. So if you're talking monitoring a KPI over 15 years by a third party, that becomes a really costly endeavor. And then maybe Victoria has some ideas about, how you'd monetize that coordination cost within the government and her direct experience. But that's the, sort of intangible, but we can quantify all the rest, the legal advisory costs, framework costs, consulting, whatever. But then it's the intangibles that I think also oftentimes, I'm sure Victoria's nodding, so I'm sure she has some idea about that internal, bureaucratic costs of putting this together.
Yes, I can complement that. We know that we have some cost because you have to hire maybe additional cost, the SPO, you have to pay the external verifier. But beside that, we think that you will have additional benefit. For example, you will improve the coordination. Right now, we in our report, for example, we put the KPI, the value of the KPI, and we include an additional section on what will be the measures and also the political measures that the government is taking to reach this target. You put the environmental target at the front of the of the political agenda. So this is maybe things that will compensate the additional cost that you have. And additionally, for example, we issue the bond, and then after that we could have the loan for the bank, and this we think that will create more incentive, for example, to have more donors. Also, you have to connect the financial, the economic world with the environmental world, in terms of, for example, to commercial, how country export, for example, to the European Union. This put on the front the import of the environment. So you are taking another externalities that will help the country to be at the forefront of the, to be to put on the forefront of the policy agenda. I think they are another strategy, not only to take in consideration the cost. And another to complement is from the point of view of the debt management, you are diversify your investor base. We see in our first issuance near 40 new investors. Then we reopen the bond and we see more investors. And then after we issue a plain vanilla bond and we see the investor that were investing in the SLB going into putting the money also in the plain vanilla bond. So this is something very important from the point of view of the debt management. You have flexibility in terms of funding. And right now we issue, for example, we could issue in the Swiss franc market. So we were open market as you were open market, for example, when you are thinking about your trading partner. You are open new financial market. So this is an important thing, and it goes beyond the cost that you have to invest when you put in place this SLB framework.
Maybe, and to bounce back on what you said before, Victoria, and to answer some of the questions about the evaluation of SLB sovereign bond reports in terms of success or failure from by investors. You rightly said that it's not only about monitoring. Indeed, there are monitoring administrative costs, but it's also about getting the targets being reached. So the question everyone is asking, and especially top officials, is what does it take to achieve the SPT? What should I do? And are the public policies in place adequate and delivering the proper decarbonization gains? So what's the virtue in terms of policy improvement, policy efficiency throughout the SLB structure?
Yes, I mentioned we were in the remember that we were putting the target of the NDC, and with the NDC you have to put the target, the KPI, the target, but also you have to put the measures. So you have a list of measures, means that how we are going to reach that that goals that you were setting in the NDC. So we were monitoring these measures that were a list that was put in when the country has put this measure under the NDC. So we were monitoring that type of measures. Of course, we will want to do at what is in our hands to reach the target, because it's not only in the covenant of the bond, but it's also in related with the commitment of the country with the Paris Agreement. So we are trying to do all the type of effort to meet the target. There will be externality that or some external show that maybe will impact in the KPIs, but we are trying to do all. The important thing is when you establish the interministerial task force, we continue to meet not only this interministerial force is for the reporting, but also to monitor the measures. So this is important because you were interacted within the all the time within the year with the other ministry. So you were getting in touch, for example, with the agricultural ministry, and you say, okay, what are how you see the evolution of this KPI, because this will impact in the KPI 1. How you are seeing the measure that you are taking for the native forest KPI. So you were trying to monitor, and it's more frequently the monitoring, and we are more engaged with the other ministry to see if we are how we are in the progress to meet the target. Remember that we have our first target is the GHG emissions, and the other is the GDP. So we have to monitor the GHG emission that is in charge of the other ministry, but also we have the GDP that is the responsibility of the Ministry of Finance. We are monitoring the GDP. So the important thing here that you have to be engaged with the other ministry and to monitor and be ready to act if you need, if you see something that will be some externality or something that could disrupt the way to the path to achieve the target. We have reported the last value for the KPI for 2023. So we have an idea if we are going to reach or not the target.
Thank you. Thank you, Victoria. There were questions about developed countries contemplating SLB. France is mentioned in the chat, so this is really good questions. Can we expect issuers like France to use the format? It's hard to say now. There have been some reluctance from developed countries regarding the mechanism. There were debates about the symmetry of the coupon step up and step down. And some of them have very sophisticated green budgeting processes. So they have the capabilities to source the asset, the use of proceeds. But in the meantime, they are increasingly engaged by issuers, by investors, about climate performance. So indeed, you are spending green, but to which extent do you decarbonize at the pace that you committed to? So this is really a question whether they would go for it, or whether they would add to the use of proceed model that issuer level climate performance delivery. So not incorporating it into the bond characteristic, but as a complement to the use of proceed format. I don't know, James, Victoria, or even
May I?
Yeah, sure.
Yeah, so to be honest, I think it's a very good question, and we have tried to engage with the developed markets about the SLBs, and we've heard pushback from the majority. So sovereign SLBs, they come with a significant risk due to the complexity, and then in case of emerging markets, the sovereigns that issue SLBs and do not meet the targets, governments must adjust their fiscal policies impacting a country's public service and government spending. So, but I think developed economies, they don't face the same level of risk. And indeed, they should actually consider sovereign SLBs is really, as I mentioned earlier, is a stronger message to the market that they are prepared, that they're ambitious enough. But their reluctance to enter the SLB market arguably demonstrates a lack of environmental commitments and ambition. So indeed, developed markets already demonstrated the deviation from the climate targets in recent years. And unfortunately, the reluctance to support the SLB market, the sovereign SLB market, is another demonstration of that. So I only hope, I think what we've seen in case of Slovenia is already a very positive step forward, that the Slovenian SLB was issued in the euro. So it's basically something that is already quite significant. Thank you.
Agreed. A good message to leave us all on, and Chile, Uruguay, Thailand, and now Slovenia have shown the way. Hopefully, those examples will be taken forward by others. We are almost out of time, so I think we'll have to leave it there. Before I do, I just want to mention one other thing which could be useful for people listening, which is the World Bank's research platform on all of this, which is at esgdata.worldbank.org. /tools/FAB. If you missed that, please follow up with the organizers. Also on the questions that were asked, please do get in contact with the organizers and we'll try to follow up on the questions we didn't manage to get to. But as we're out of time, sadly, we'll have to leave it there. Thanks to everybody who joined. Thanks to all our panelists, and many thanks to Cedric for helping with the moderation, and thanks to ICMA for hosting. Hopefully everybody found it useful and plenty of ideas to take away, but let's all work together and see how we can scale this market. Thanks, everybody.
Thank you so much.
Thank you.
Thanks, everyone.
Thank you. Thank you. Bye-bye.
Bye. Thank